I'll take a moment to introduce you, Nadia Bazulina. She recently joined the mayor's office last week.
Hi, Nadia.
Yeah, so let's welcome her.
Great.
Welcome.
Welcome to TRS, Nadia. Good luck. Thanks.
Thomas Brown,
Here. Good morning, Patricia.
morning. Ephraim Zachary,
Yeah.
John Dorser,
Yes, representing Control Land.
David Kazansky,
Present.
Victoria Lee. Present. We have a quorum. I'll turn it over to the chair.
Good morning, everybody. And the first item on the agenda is the Passport Funds December 2023 performance review and Brokaton.
I'll pass it to Amanda, who's joining by Zoom.
Great. Hey, Amanda.
Hi, Tom. Hello, everyone. Just hide this here. All right. Hopefully, you're all able to see my screen. I'm gonna kick things off with just a quick review of December results for the Passport funds. Not quite as strong results as we were able to talk about last month with November, but certainly closed out calendar year 2023 on a strong note with positive results across the board for the Passport funds. In the month of December, we had a continued favorable macro backdrop, so resilient growth in the US, continued disinflation both in the US and across economies, more dovish shift from the Fed, which has been helpful in terms of supporting equity markets. For the diversified equity fund at the top of the page here, where the bulk of your assets sit in the Passport funds, the month of December was up a positive 5.5% or so, and pretty similar results, mid 5 to 6% results for both the US and non-US equity components of the diversified equity fund. And we did see benefit from active management within that strategy. The balanced fund directly below it is your most conservative fund in the lineup. It is about 30% short-term fixed income, 70% equities. So given that mix, not surprising that in this very strong market that we saw in December, the fourth quarter and the calendar year 23, that it was the weakest relative performer compared to your other options here, but still managing to return over 10% for the calendar year 2023, both on the success of the equity sleeve as well as better results from short-term fixed income, given where we saw interest rates this year. On the flip side of that, your strongest performing fund for both the fourth quarter and the year was the Sustainable Equity Fund, about 2/3 of the way down the page. And that fund very much benefited from the strong growth environment here in the US in 2023. Although over the trailing 1 year, it did slightly trail that benchmark, returning 39% versus 42% for the index. That index was very difficult to beat this year, and as we've talked a little bit about throughout the year, that growth index in the US was very much driven by the Magnificent Seven, those big tech stocks that really dominated US equity markets in 2023. So very, very successful year across the board for the Passport funds, with strong results ranging again from 10% on the balanced fund to as high as 39% for the sustainable equity. So I'll stop it there and just see if there's any questions on December before Mike jumps in on a quick January update.
Any questions for Amanda? Thank you, Amanda.
Great.
And Michael will take the January 2024 market performance update.
Yep, I will footnote up front
Thank you.
that this is not the full month of January, and importantly, does not include yesterday's market returns, which unfortunately, yeah, exactly, that was a good thing. So, you know, even in spite of the relatively strong negative day we saw in US equity markets yesterday. So the S&P was down about 1.6% yesterday. Even with that negative day, we would contemplate or expect to see numbers here that are all directionally strong through the entire month. But you can see through Tuesday's close, the Russell 3000 was up over 5%. So the year got off to a very strong start. We continued again coming into the year, as we discussed in our comments in the first week of January. You know, the market really was expecting a fairly high likelihood of the Fed coming in the later part of this first quarter, 2024, and lowering rates. I think we shared the same view as Steve at the time, that was probably a little bit over exuberance on the part of the market. That said, we got the Fed minutes yesterday, and they did hold firm. No one was really expecting a rate reduction yesterday, but in the language that the Fed put out, you know, it was pretty clear, and I think they were trying to signal to the market that they would be very deliberate about how they moved on rates looking forward. And they tried to caution that while the economy continues to maintain a pretty strong level of growth, which albeit maybe slowing this year, there really wouldn't be a move on rates until the Fed felt very confident about its ability to have inflation kind of come into 2%. So from that perspective, we think the market sort of reacted yesterday to, in a way, counter the exuberance coming in to this year, which was more around expectations of rates coming down in the first half, which again, I think we're putting out in our minds as more of a second half of the year thing. So anyway, that was what really kind of drove markets yesterday. All told, you can see it was a very strong month on the heels of what Amanda described as a very strong 2023. So I mentioned the Russell 3000 coming into yesterday was up over 5%. Non-US equity markets also having a very strong month. Developed ex-US up right around the 5.3% for US markets, and then emerging markets up about 3.9%. I think the overall expectation is if you do start to see the Fed cut rates this year, that should all told be helpful for capital flowing to emerging markets. But at this point, you know, the same level of exuberance around rates coming down in the US hasn't necessarily shown up in what we've seen in terms of expected performance around emerging markets. And still obviously many issues, more idiosyncratic issues at play with respect to emerging markets. So all told, strong month of January, even in spite of yesterday. And I think that's the kind of headline we want to put. Any
Thank you, Michael. Any questions for Michael?
I have a question. I don't know if it's necessarily for Michael, could be for Amanda or anybody else. I'm kind of new here. Why do we have a balanced fund if we already have equities and fixed income? Like, what's the advantage of having an additional balanced fund on top of what we have?
Yeah, there's a need to ensure that there's a certain number of options available for participants that can provide some level of diversification. And so I think what we generally do is talk a little bit more about the specific offering of options in executive session. But the balanced fund was really a recognition that there was a desire for options which provide a little bit more diversified exposure in a single offering for participants. There's also some member money that needs sort of that more diversified option available for it because it doesn't necessarily have the flexibility to invest across options. So I think we would prefer to take that up offline, but happy to address that.
Thank you.
Thank you. Thank you, Mike. Any more questions for Michael or Amanda? Thank you. And let's see, Anash, do we have anything for the public agenda?
We do not have anything.
Pension fund?
Not for the public.
Nothing? Great. Okay, thank you. So I think it's time to go into executive session. Do I hear a motion?
So moved.
Second. Thank you, David. Thank you, Effie. It's been motion and seconded. All those in favor of going into executive session, please say aye.
Aye.
Those opposed say nay. Any abstentions? We're now in executive session. Thank you. Welcome back, everybody. We are now in public session and we'll have a readout from Ron Swingle.
Thank you. Good morning. Excuse me, in the executive session of the pension fund, there was an update on preliminary performance data. There were two private equity presentations. Consensus was reached on both. And there was a public equity presentation in which consensus was reached.
Thank you, Ron.
You're all.
Seeing no other business, is there a motion to adjourn?
So moved. Second.
Thank you. Thank you, David. Thank you, John. All those in favor of adjourning, please say aye.
Aye.
Those opposed say nay. Abstentions, we are officially adjourned. Thank you, everybody.